This is Andrew Stotz of A Stotz Investment Research to talk about my FVMR investing style. All of my investments I consider in what I call an FVMR framework. To learn about this framework, first we have to think about the earnings that a company makes and then the price that we have to pay for those earnings. Management is responsible for the earnings and the quality of the earnings, and the investors look after the price. We start with the first item, which is F, fundamentals. Profitability shows whether companies are managed well. I'm, of course, looking for high or rising profitability in the best case. The next factor is valuation, where I prefer good fundamentals at low prices. But we know that this is rare, so I consider a balance between valuation and fundamentals. The next item is momentum, and as you can see, momentum has to do with both earnings and price. I try to avoid value traps by looking for positive momentum in both price and earnings. Of course, at times, low momentum can signal an out-of-favor opportunity that I would consider buying. The last element, R, is risk. In this case, I'm looking for low business and price risk. It would be perfect if I could find low risk, high fundamentals, and cheap valuation and good momentum, but that's not always the case. Now, sometimes I may have a stock in the portfolio that's all about risk, because not every stock's a winner. Sometimes I'm going to enjoy those investments that provide a stable return and strong dividend. So that wraps up the concept of FVMR and how I do my stock selection.